Now, all of that sounds amazing and very much in line with our 200 plus episodes that we've done over the last 5 years. Shout out to us on that. But Jax, what I really want to know is what on earth are you doing? What are you doing, my
What are
bro?
you doing? Look, I personally was quite, privileged, and lucky. I use the word lucky.
Hello and welcome to the Woke Finance Podcast, the podcast discussing all things finance and all things finance related. It's your boy Peter, and I'm with my co-host, my bro Jax. How are you today?
You sound pretty excited. No,
It's
bro.
late, bro. It's late, bro. I gotta have the energy.
No, I'm doing well. It's been a fantastic week in the stock market. It's been a very interesting week in the stock market, must I say. Lots of volatility, lots of ups and downs, lots of news flow, lots of activity. So I'm looking very much to talking about all the interesting things that's been going on around the globe.
Listen, man, we can't ignore the elephant in the room. So thanks for addressing it right here and then, man. We are definitely going to be responding to all I mean, for some excitement, for some fear, for some confusion that's been happening this week, man. But before we do that, just a massive shout out to our listeners wherever you are in the world, man. We appreciate you. We see you, we recognize you, and we just, yeah, very grateful for your ongoing support, man. Please keep supporting us. It does go a long way, not just for this platform, but just the work that we do here on the podcast, but also in the community when we work and support young people from underserved backgrounds and with financial education and literacy. So please keep supporting as you can. Now, Jax, before I even touch on the topic, I just heard that you've been on a live. Let's talk more about that, do a plug, and then we get into the topic.
Yeah, absolutely. So I was on a live with a good friend of mine. I say friend, we're just in the same space and we've been watching each other for a while. I think I met him about 6 years ago. Pete Komolafe. He is a financial advisor. He's got a pretty successful platform on YouTube. He's also on Instagram, and he reached out to me this week to discuss what's happening around the globe, things that we'll be discussing on this episode as well. I literally just finished shooting that like 15 minutes ago. So it will be up on his YouTube page. That's Pete Komolafe. He is the financial advisor and he has lots of amazing content around personal finance.
Come on, shout out Peter Komalafe. I believe one of his channels is, as you said, on YouTube, the Conversation of Money. Definitely do check out his stuff, and yeah, hopefully you get to see our very own Jax do his stuff as well, man. But nah, shout out yourself, Jax, as well, man. And yeah, of course, it's been a quite a busy week in the markets. Now, for a lot of people, Jax, they might have just seen lots of news, maybe potentially scaremongering, some yeah, lots of headlines, and of course, a particular individual, a particular person, a particular character, that a
You're,
particular
you're
name
making me
has
laugh.
come up behind all of this as well. It's not just this person, but played a major part in what's been going on. So let's actually just kick it off, Jax. First of all, what's been going on in the financial markets over the past week, which has affected everything?
Yeah. So over the past week, early April, President Trump, the president of the US, strongest economy in the world, held what he called Liberation Day. Fantastic terminology. And on that day, he announced some tariffs, which is essentially a tax on his trade partners, which is basically everybody around the globe. And that was quite a shock. We kind of knew that Trump, talks about trade deficits. He talks about the amount of tax or the tariffs that is being imposed on the US uh, companies, and says basically, in short, that look, guys, we are getting bumped. The kind of tax that we pay is completely, much higher than the ones that our trade partners pay, and we want to make things equal or fair. And so he came with what he called reciprocal taxes, a minimum amount of 10%. And then he decided to actually um, basically enact a tax, or not enact, but come up with an idea that he's going to tax everybody basically the same amount that they tax us, which was not expected by the market, wasn't expected by most people, and the stock market had a very, very adverse reaction to that piece of news. We saw the stock market drop by a specific amount. I can't remember on the top of my head, but what I do know is it was the largest drop in the market since March 2020, which is the height of the global pandemic. So you can imagine what that meant for people's stock market portfolios.
which is crazy. Now, thanks for just even talking a bit about what's been going on because I think for maybe someone who's had a very busy week and maybe just have like 5 minutes to check the news every day, it will be like, whoa, what's actually happened here? Maybe if they check their portfolio every so often and happen to check this week, they probably would have seen, maybe something that wasn't there last month in terms of the value or so. So there's been a lot of things happening, Jax. And you mentioned we've seen some of the bigger drops since March 2020. I think there was a record of something like the largest 3 day drop generally in the market since a long time basically. So it's been quite a interesting week. Let's talk a bit more about what's been happening over the last 5 days or so, and maybe for someone who hasn't checked their portfolio in the last 5 days, what they may or may not see and why. What's going on?
Yeah, so after he came up with these tariffs, sorry, the stock market clearly responded in a very negative way. If you were someone, I think Peter, you've been quite lucky, you've been quite busy, on the ground that you was not bombarded with as much news as I was, as someone who actually works in the financial markets. So for me, gosh, yeah, we've had a chaotic week, trying to respond to the news, adjust portfolios and in terms of risk and that kind of stuff. But yes, if someone had happened to check the portfolio this week, they would have had a very interesting experience. They would have seen the stock market drop, their portfolio drop significantly, albeit depending on what they invested in. But if they were in, let's say, high tech names, we saw the Nasdaq drop, probably I think one of the biggest drops since 1982,
Mm,
since the World War II, I think. And so yeah, the Nasdaq dropped quite a bit. The S&P 500 dropped quite a bit as well, and so did the Dow Jones. So they would have seen their portfolios drop. However, it depends on how much early in the week we're talking, because guess what? Not long after the stock market and even the bond market reacted, President Trump came out with a 90-day pause where he came and he said, "Hey, well, I'm gonna give you guys 90 days to because 75 countries or so have come back to to negotiate some of these and have conversations, and we're gonna give a 90-day break. However, there's one particular country that we're not going to give this break to because they have retaliated, and that is China.
of
And
course.
then China hit back with their own tariffs. And then President Trump said, "No, we're not going to have that." He hit back with even further tariffs. So it's a very interesting time to be alive to watch these two giants literally go at it.
It was always gonna happen. It was always gonna happen. Now, my question is, Jax, the markets have responded full stop. We've seen some crazy drops, in single days, in a short space of days. Now, just because Trump has, simply imposed these tariffs, generally the stock market is following the nature of businesses. So generally if businesses do well over x amount of months and years, the stock market tends to follow that and tends to rise accordingly. Likewise, if businesses do bad, it goes down. Now these tariffs, just because he's imposed them right now, it doesn't mean that businesses start paying these, what say countries start paying these taxes right now and then. So why have markets literally completely tanked immediately? Like, what is going on? As in, are we that, is the question that weak that the markets just go down because one man has just said something?
Yeah, yes, the market responds to information and news. Remember, the stock market is a pricing mechanism for the future, and it usually minimum, forecast is 6 months into the future. And so, whenever any piece of information comes in, the market would react. In fact, there are different people that have different ideologies as to how efficient the market is in terms of pricing certain things, and a big part of that is how it prices information. So when new information is presented in the market, it must reprice and try to price that into the stock market prices. So yes, it does almost react to different types of news. That's why even when, let's say, a CEO steps down from a company, that stock will respond, even though it has no idea whether the new CEO is going to be way better. Right?
Mm.
So that's just how the market works. It's an emotional, volatile place, especially in the short term. But in the long term, time and time again, we notice that it is not the news that causes stocks to go up in the long term. It is actually earnings, the profitability of these businesses. That's what makes stocks go up in the long term. But in the short term, it is sentiment, it is emotion, it is feelings. And the one thing the stock market absolutely hates, Peter, is uncertainty. It does
Mm.
not like uncertainty. And that's what President Trump has provided, a lot of uncertainty. We don't know what he's going to do next. One day he's saying he's going to enact reciprocal tariffs. Another day he says he's going to give 90-day breaks. The 90 days, we don't know what's going to happen at the end of that 90-day period. And so the stock market at this precise moment in time is very confused and doesn't really know what to do. But in situations where there is uncertainty, there is often volatility in the stock market. One thing I do want to say very quickly, though, Peter, is that even coming into this year, the truth of the matter is there was quite a lot of inherent risk in the stock market already
Mm-hmm.
because of the valuations.
Mm.
We had gone up twice in a row by quite a large amount, if I'm using the S&P as a proxy. And so, yeah, valuations were already stretched, and there was always still other risks aside from tariffs. There were risks of even stagflation, which we've made episodes on. So we've done episodes on. So there was already a bit of risk, and so when you add in these tariffs and President Trump's antics, then you can definitely imagine that yes, there will be a lot of volatility in the stock market.
Crazily enough, our very last episode before all of this craziness happened was, are we heading for a recession in 2025? Well, stuff like this doesn't help, does it? But no, Jax, as you said, the stock market can be a very emotional place, and it's certainly been very emotional this week, which of course emotion leads to actions. And I guess with what's happened this week, these are real life things happening, real life trades when prices are going up and down and stuff. So I guess it will be good to take a bit more of a deep dive into, obviously how have people been responding by what we're seeing in terms of selling, buying, all of that jazz. And then probably more importantly for those, the majority of our listeners will obviously be interested in investing because we talk a lot about that. What can we be thinking about? How can we respond as well? But before we actually go on to that, Jax, you mentioned a couple of minutes ago that even the bond market has gone down. And in the past, we've spoken about bonds, and generally, we've always, kind of said, bonds almost kind of balance and provide that protection when stocks might be going down. Bonds are the places where people putting their money into, and it's fairly much less volatile. So yeah, what's happening there? Because isn't that, would you say that's a bit scary as well? The fact that bond market is gone down fairly significantly, or has reacted as well.
Yeah. So okay, so the economic environment that bonds don't like is often stagflation. Let's call it stagflation. A high inflation environment with low growth. Bonds don't like that. They really don't like that. And neither do stocks. Basically, any asset that has a level of risk in it that doesn't like this kind of environment. And so what we saw, and by the way, there are different types of bonds. And I would encourage our listeners to learn about bonds because the bond market is a very important part of our economy. Remember that bonds can be corporate bonds where you lend to businesses, but especially government bonds, this is a very important thing to watch. And the US 10-year, which is a great proxy for what's happening, we saw the yield go up. And when the yield goes up, it means the price is going down, which is really and truly means people are selling the US 10-year Treasury, and there are different reasons for that. But that's often not a good sign. It also means that borrowing costs are going up as well. Okay, so it's not a good sign. And generally speaking, when that happens, that yeah, it can be scary. And there are people saying that look, the reason why President Trump is reconsidering his thoughts on these tariffs, or maybe not reconsidering, but why he's done this 90-day pause and why he's willing to negotiate, etc., is because the bond market has spoken. And
Mm.
when a bond market starts to speak, you have to pay attention. We saw that particularly here in the UK when literally the bond market got rid of Liz Trust. So we have to be very, very mindful of that.
No one's safe, even Trump.
Yeah, but there's a funny terminology that I say funny, it's an interesting terminology called the bond vigilantes.
Mm.
Yeah, these are people that will sell bonds, and that can cause a lot of harm in the UK.
Yeah. Wow, 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 man. There's so much going on, man. So much volatility at the moment. So, Jax, my next question to you is literally, and probably to start to wrap up, is what should people be doing with all of this volatility? But before we do that, Jax, we're gonna give a shout out to where we're getting listeners from, particularly areas we've not given a shout before. And it's only right we give a shout out to a country to an area in the US, and this is Boston in Massachusetts.
Massachusetts, Boston. Welcome, 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 welcome. I hope everything's all going on all right down there. Welcome to the Woke Finance Podcast. You will hear of myself, Jax, and the co-host Peter. And on this podcast, we talk about all things finance related. If you want to know more about what we do, like Peter said earlier on, we do serve in a community, predominantly underserved youth. We provide them with raw financial education. Head over to www.wokefinance.co.uk. That's www.wokefinance.co.uk. But we are also on socials. So if you go on Instagram and search for Woke Finance Team, you will find us. We are on LinkedIn and on TikTok as well. But again, if you search for Woke Finance, you will find us. Welcome to the podcast. I hope you were enjoying the episodes and gaining tons of value.
Come on, come on, come on. A shout to our listeners over there and all over the US. We know that you are definitely our second biggest group of listeners, so we appreciate you. And of course, shout out to listeners all over the world. Now, Jax, what on earth should people be doing in response to this fantastic week to observe?
Well, first and foremost, they should have been listening to the woke finance over the past few years. We have
Come on.
spoken about things like stagflation. We spoke about whether we're heading to a recession. In fact, we've spoken about a lot of things that if people listen, chances are they would have got their portfolios ready for a time like this, right? So that's what people should have been doing before. But in terms of what you can do now, hey, remember when it comes to managing money, when it comes to building portfolios, investing, it is all about building a portfolio that matches or optimizes your objectives, your time frame, your risk appetite. That is what real investing is all about. So it's not about just buying the best stocks or the most volatile stocks because nobody knows what's going to happen tomorrow, but we can build and optimize portfolios that best helps us to reach our goals within the constraints of time and risk. And so, if you have that in mind, then you can use that to make a decision. If you have a long time frame, like 20 years plus or 15, 20, 30 years, then if I'm going to be really honest with you, who actually cares what happens in the short term? If you already have a system in place where you are dollar cost averaging or pound cost averaging and you're putting money into the market every month that you get paid, you probably want to continue doing that. If you are someone who's a bit more active and you decide to put more money in sometimes or dial back sometimes or to rebalance your portfolio sometimes, this may be a time to maybe start putting a bit more money into the market. But the truth of the matter is nobody knows what's going to happen next. There is still a lot of uncertainty. Hey, it may be a great idea to just not do anything, right? Our animal spirits, John Maynard Keynes mentioned this. He says the thing that causes a lot of people to make irrational decisions are our animal spirits. What he really means is we are often governed by fear and greed. Why? Because animals tend to either attack or run away. right? They're either scared or greedy, okay? And often this is what causes us to make irrational decisions when it comes to the stock market. So we have to be aware of that and not to become subject to our emotional biases and our human biases as well. So making no decision, which again is against our natural human bias, is still a decision and it could be a very good decision. Again, if you are even more active, then you can decide, hey, this may be a time to actually pick some of the stocks that you've always wanted to buy, but the valuation was always stretched, and now it presents an opportunity. Does this mean that the stock market is going to go back up in the next few weeks or the next few months? Nobody knows, and anyone that claims to know is absolutely lying to you. And
For
so
real.
you have to invest with that in mind. The stock market can go down and it can keep going down the whole year. It can go down the whole year. It can go down even next year as well. Again, all things are possible. And so you have to always ask yourself, if it does go down further, and even if it goes down again further next year, are you in a position to still invest and grow your wealth and buy assets at these discounted prices? And have you again built a portfolio where you have cash on hand to look after your short-term needs while you invest for the medium to long term?
Now, all of that sounds amazing and very much in line with our 200 plus episodes that we've done over the last 5 years. Shout out to us on that. But Jax, what I really want to know is what on earth are you doing? What are you doing,
Wait,
my
what are
bro?
you doing? Look, I personally was quite, privileged, and lucky. I use the word lucky to have really de-risked my portfolio come towards the end of last year. And that was to do with personal circumstances, kind of coupled with the fact that I felt that the stock market was quite overvalued and there was quite a lot of inherent risk. So, the truth of the matter is, I'm never gonna time things perfectly, but I just got lucky, and now I just happen to be in quite some cash. It's really important to understand that I am not completely in cash. I still have quite a bit of my net worth in assets. With that in mind, what am I doing? I am taking it easy. I am looking at assets that I've always wanted to buy, particularly what we call quality assets, good companies that have been around for a very long time. They are profitable, they produce what we call free cash flow. And I've always wanted to have them in my portfolio, but almost every time I look at them, they are overpriced. These are the assets that I am prioritizing and looking to buy over the next year, to be really honest with you, or for as long as this thing goes on, as long as the valuation looks compelling. Also, my existing positions that may have come down in price are better valuations than what I already bought them. This provides an opportunity to reduce my cost basis. It allows me to buy the same shares that I loved at one price at a cheaper price. But again, the key thing I'm saying here is I am not going in all guns blazing. Why? Because going all guns blazing can lead to a gun war. So I'm just buying a small amount, and I'm being very tactical. And I've allocated a budget towards investing for the next year, and that's all I would do.
Love it, man. Love it, man. And yeah, just very interesting to hear, different tactics and how one observes such a time. And as we all know, in the future, there'll be similar times like this
Yeah,
again. It's almost
we'll be
inevitable.
back again.
We'll be back again. We'll be back again. As we always talk about on the Woke Finance podcast, this is an emotion game and it's about how to respond in what we feel is the more wise way. And as Jax mentioned, really thinking about what are your objectives, your time horizon and your risk tolerance. And when moments like this happen, it really tests just how much, you do stick to things like your objectives.
Yes.
And you don't want to be that person that you have clear objectives, but when moments like this happen, you just derail and go off them. Because yeah, as we said, moments like this can happen
Yeah.
at
Yeah.
any time.
Well, Peter, funny enough, I was actually Pete is yeah, his name is Pete as well. That's interesting. The recent podcast that I just done, or also a YouTube live I just done with Pete Komolafe of the Conversation of Money. I was very much telling him about the conversation that we had, Peter, in 2022,
Mm,
when I said that this experience of the stock market going down the whole year is a fantastic piece of experience,
100%.
right? So now we know what it's like for stocks to go down and go down quite a lot and go down for
Mm,
a long period of time. And
mm,
that allows us to make certain better decisions going forward because we've experienced it in real life.
hmm,
Right? So this is not a shock for people like myself and yourself. We've
mm,
seen stuff like this from back in March 2020, the 2022, and to be fair, even I think he was invested at that time as well. 2018 in December, we experienced a
mm-hmm.
bit of a shock as well. So we're used to this. This is not brand new. This is not brand new. And if you are brand new to stock market investing, again, I think this is don't use this as a time to get scared out of the stock market. The stock market is a fantastic wealth generation, growing wealth tool, and it always has been as long as you remain as rational as possible. And don't get scared out of it. This is a good experience for you to know what it's like. And in the next 10, 20, 30 years, as you continue on this journey, you would remember times like this and notice that it was probably a time of opportunity rather than a time to get scared. But you would remember that it can happen.
Hmm. And on the other side, on that time of opportunity for the newbies, you will have friends that have so-called been investing for many years, and they may be telling you it's time to go heavy and buy. Again, word of caution, man. We've Jax have just spoken it about it as well. Yes, I truly believe, there's always opportunities in time like this, but you need to make sure you really know what you're doing.
Yeah.
And we've spoken about, yeah, go on, Jax.
Yeah, I was going to say the word I would leave our listeners with is prudence.
Prudence, man.
Be very prudent in this
Please,
time.
man.
Yeah.
Yes, absolutely, absolutely. But nah, Jats, man, definitely good. And I mean, for me, viewing stuff like this is entertaining. It's entertaining to read and understand, just from an economy perspective as well. And it's always interesting learnings during this time as well. And yeah, Mr. Trump. But that's another story for another day. I remember we done probably years ago about the when he was in came into place the last time. And we was doing a response to that as well. And yeah, it's just interesting, man.
We've gone full circle.
Listen. But nah, man, thank you very much for that, Jax. And thank you very much for our listeners just staying tuned in. Don't forget to check out the live that Jax has done on the other platform, with the other Peter Kamalafe Conversation of Money. Make sure you check that out. If you get a link, Jack, we will put it in the description as well. And then yeah, listeners, man, keep just supporting our work. Keep the conversation going. Hopefully you found this useful, you learned something new. And yeah, tune in for the next episode. Remember all,
Stay
stay
woke.
woke.